I was asked by a viewer in another video to do a video on which stocks I'd start a portfolio with today in 2025. So here are 10 stocks I'd start an equal weight portfolio with, assuming I'd have to start today. Please note that this is how I would start a portfolio, and my needs and risk tolerances are different than yours, and to please do your own research before making any investment decisions. And the first company I would pick if I were to have to start my portfolio from scratch in 2025 would be AMD. So this company is very diversified and is getting absolutely no love from the market despite being in a prime position to benefit from the massive investments in AI over the next decade. They only need to grab more market share than the market expects, and truly they are probably the closest competitor to Nvidia that exists in the market today. If they were to execute well and the market finally changes the poor sentiment on AMD, the stock could really rally from here. Second company is Amazon. This company is already the largest position in my personal stock portfolio, and I still believe even today, with the stock trading at a higher price, it's a decent value. They are the number one leading cloud provider with AWS, a fast-growing advertising business, ads on Prime Video, as well as recurring revenue from Prime membership. This company has many tailwinds, such as automation in the warehouses with robotics increasing productivity. They're using over 750,000 robots in their warehouses, with more on the horizon. AI is a net benefit to the company as they can host AI services on their servers, and they can increase the profit margin of Amazon, making the website easier to navigate and make purchases. The third stock is ASML. This is another stock I just started a position in, and it's a monopoly selling the machines that can create high-end computer chips. There is no other company that they compete with, so they have incredible pricing power and generate revenue from servicing existing machines, and will benefit from the trend of every country starting to develop their own computer chips, as relying on China and Taiwan exclusively comes with many issues that were clearly demonstrated a few years ago, as supply constraints affected many industries, as well as national security being a primary growth driver for more local manufacturing of high-end computer chips for years to come. The next company is Alimentation Couche-Tard, or stock ticker ATD. They had a pretty bad 2024 where the stock price basically went nowhere, as they were rumored to be wanting to buy 7-Eleven. And while they did put in several offers, it does seem like the 7-Eleven company does not want to be acquired. It just doesn't look like it's going to happen, as they want to sell the company privately, and they do not want to be owned by a company that is from another country. So ATD should benefit from this, as the stock price really suffered from that rumored transaction. If it doesn't happen, again, they should just do the regular smaller acquisitions that they're known for, and the market should not punish them for a large acquisition, especially if it doesn't seem to happen or have any traction or legs to it. And they also suffered poor performance due to a struggling economy, but many of Canada's big banks believe 2025 will show some GDP growth, and this should benefit ATD, as people tend to travel more in better economic times and won't prioritize going the extra distance to a dollar store or a grocery store. And that should benefit ATD, as if people are less sensitive and price conscious, then they're more likely to go to a convenience store and pay the high prices there. This is a position I do hold in my own personal TFSA. The next company is Brookfield. Brookfield is an incredible alternative asset manager with investments in infrastructure, renewable power, data centers, and they also collect fees from institutional clients to buy distressed assets that produce predictable cash flows, and then they can sell those assets in the future for large gains when the market is more favorable towards that asset type. I own this stock in my TFSA as a major position, and I do believe that it is poised to have an excellent future. The next position I would start a position in is CNQ, or Canadian Natural Resources. This is an extremely high quality company that has pretty much remained flat in 2024. The demand for energy is expected to be strong in 2025, which should keep oil prices elevated. CNQ is giving back so much money back to shareholders with share buybacks and a growing dividend. I would also start a position in CNR, or Canadian National Railway, if I had to start my portfolio over again. This is a duopoly with CP Rail. CNR is trading at a better value with a dividend yield of over 2%. Which historically is a decent time to buy the stock. The railroads are going to remain the cheapest way to transport goods for the foreseeable future. EQ Bank. This is Canada's fastest growing bank and is challenging the large banks with better products, higher interest rates on regular checking accounts. They are, in fact, the reason you have free e-transfers at your bank. EQ Bank was the first bank to offer this service, and it used to cost several dollars for each transfer in the past. It's an all-digital bank, so it has much lower expenses than the big 6 Canadian banks, as they don't need to have physical branches. They're offering business accounts to customers that also offer very attractive yield, which puts the other Canadian banks to shame. I own EQB in my TFSA as a 5% position. I would also start a position in Google if I had to start a portfolio in 2025. This company is trading at a very cheap valuation and is continuing to dominate with YouTube, Google Search, and Google Cloud. Now being profitable with increasing margins is looking quite interesting. They also have investments in robotaxis with Waymo and continue growing their market share, gaining access to new states. They also can massively benefit from AI, as it can lead to more efficiencies as they can decrease their number of employees, which will further boost profits well into the future. And the last stock that I would purchase is Hims and Hers. So Hims is a stock I have in my personal stock portfolio already. They offer US customers access to healthcare with free consultations and follow-ups. They send prescription drugs directly to customers' homes at a lower cost than going through the traditional pharmacy system, as health insurance companies increase not only prices, but also make it more difficult to gain access to these drugs, as some are not covered by your policy. The customization they provide with their medications to lower potential side effects will create strong customer loyalty. And as customers age, they will need more medications, and Hims will benefit from a growing aging population. It is also trading at what I believe to be a reasonable valuation, considering the fast-growing nature of this business and the total addressable market that they have access to for years to come. And for full disclosure, I'm long Hims, ASML, BN, AMZN, EQB, ATD. I own HTA, which is an ETF that has exposure to AMD and Google, which is why I don't own them individually, as I already have exposure to them in my portfolio. I own VDY, which contains CNQ as a top 10 holding, but I would not be opposed to owning it individually for a slightly more exposure, as it's a high-quality company. As for CNR, I used to own it in my portfolio, but I'm trying to build up positions in Hims and ASML. When they are at the desired weights in my portfolio, I'll look to add a railroad back into my portfolio. So that's how I'd start a portfolio in 2025. In the comment section down below, please let me know what stocks you would start a portfolio with this year if you had to start from scratch. Don't forget to leave a like and subscribe to the channel so you can follow along with my Wealthsimple account, which is currently valued at around $50,000. Have a great day, everyone, and I'll see you next time.